Rohit Srivastava is joining in from Indiacharts. Rohit, great to have you on today. You definitely need some perspective because I think traders and investors in India tend to forget what market falls look like, right? We've been in that kind of a market. But you tell us what sense do you make of this? We're down 4% from the top on the Nifty. It's not much. What do you see ahead?
So it's interesting, and we'll have to break it down into 2-3 different time frames. One is the very short term, because we have seen this fall go on consecutively for like 4 to 5 days now, I think starting from Friday. And that puts us in the short term at a very, very oversold condition. The way it's falling, the RSI indicator, for example, is at almost 16. That's an extreme. We have our own proprietary momentum swing indicator dropping below 20. So that's entering oversold territory. What this all tells us is that we should be overdue for a bounce back from here. Not necessarily today, because it's the weekly expiry, and all that puts additional pressure on the market bouncing back immediately. But definitely tomorrow, I would like to see it retrace some of these losses, whether it retraces 38%, 50%, or the classic 61%. That we will, of course, go ahead and see. But the other change which is happening with this breakdown is that it is starting to break the trends on the weekly and monthly degrees, which means the medium term, longer term setups. I'll not say long term yet, but definitely medium term, which means for the month of October, we should stay prepared, not just for more volatility, but let's say for more downside, because volatility and downside come sort of together. In other words, going forward, every bounce we will be looking at skeptically, possibly with the intent that there may be a opportunity to sell. But here's the good side between the broad market and the Nifty is when we are looking at September, the weakness in the broad market was almost telling that the market is not in good health. But here, when we're actually falling over the last couple of days, we are not seeing the broad market fall that much. So it's actually giving you a different sense of safety. That fine, we are falling, but we are not falling so much. So maybe things are not so bad as far as the investment side is concerned. So we are not seeing a breakdown in many charts individually. Some of them are weaker than others, but it's not like across the board. So that is giving us a slight sense that we can allocate to stocks, based on some kind of bottom-up picking or some kind of trend picking. And so that is good news for investors, that you don't really have a major breakdown on the long-term trends, but you'll have to be selective. But on a 1 month basis, I would still expect more downside, for various reasons. Like I said, one is we are breaking several levels today. These are rising trend line from the August bottom. We are breaking the 20-day average. And, we have an extreme positioning also in the futures market, where the client side is extremely short and, the FI side is extremely long. And the third reason why October could be bad is it is seasonally bad before the US election. If you just look at the last 3 election cycles, October month, the market was down. And November, once the election results were announced, you had what is usually called the presidential rally. The next couple of months, it just goes up. And this is a pattern that has repeated since 1992. I've not gone further back and checked. But that gives us a couple of elections which have followed the same pattern. And would this time be the same? So we should be prepared for something similar.
Interesting data points. Thanks, Rohit, for joining in here on CNBC-TV18. I wanted to focus on the larger constituent of the Nifty that actually led us up to that 26,000 mark, the Nifty Bank. In a matter of 3 sessions, it's lost 2,500 points, close to around 5% odd. How is that shaping up? Because that's been the rock, that's managed to start performing, and now it's underperforming yet again. So levels you're tracking on that one.
Yeah, so Bank Nifty is, I think, at a very critical support. I'll put out a number that's around 51,500, let's say. If we do close below 51,500, it'll be breaking the trend line again from the June lows. And that would not be a very, very pretty thing to happen. So we do hope that, if the upward trend towards, say, 55,000 is still intact, that we don't really break 51,500 on a closing basis. So that is going to be the hope. So we've still not done that. And so it leaves us open with some case that, Bank Nifty may still have something to show us. But what we'll also do on the upside is that as this market does bounce from an oversold state, which I'm talking about, we need to watch the 61% retracement as well, which means, can the bounce really make a new high? Can it get past that critical level? And that level is going to be at around 53,000. 370. So if we get past that, then there are odds that we get to 55,000. If not, any failure to get past that level would again open up another selling to the downside.
Got it. So on the buck on the downside, 51,500. On the upside, 53,370. Got both those two numbers down. Rohit, I also wanted to ask you the largest constituent, the other large one on the index has been Reliance Industries. And it's, been absent from any kind of move in the last 6 months. If I'm not mistaken, Reliance is down close to 3-4%, while you have the Nifty that's up 12-13% in the last 6 months odd. What's going on there? Because now it's broken the 20-day MA, even the 50-day MA, and it's testing lower levels. Your take at it on this 2,820 rupee mark?
Yeah, so Reliance has not been the best stock within the entire setup. I do have an important support level coming in at around 2,743. Since we are talking of stocks, let me just highlight, we don't really give advice, so you should not really take anything as a buy or sell recommendation. But the trade setup, like I said, if I look at daily or weekly momentum indicators, both of them are, bearish signals. The monthly one has still not done that. But breaking last month's or previous, I think last 2 months ago's low, which was at around 2,866, is a not very good sign, because it's the first lower high, lower low pattern that we are seeing since the bottom that we made in March of 23. And that tells us that, that we should be open to more downside for Reliance. That's the basic indication from there.
On the Nifty, Rohit, you spoke about downside for the month of October. What would be the key levels?
Yeah, so initially, like I'm thinking right now that we are getting oversold. The immediate support right here is at 24677 or sorry, 2550. Well, we broken that. Yeah, so 25229 odd. So we're sort of at the support, I would say right now. And if this breaks, then where do we go? Then it's around 24,700. That would be the next level, maybe 24,400. So we would be open all the way to the 20-week average, which is 24,500. But I don't expect that to happen one way. That's all I'm saying, because if we get oversold, again, we look, just like I mentioned in Bank Nifty, we would look at the 61% retracement of this fall, which comes in closer to around 25,870. And we'll have to get past that if anything new has to happen on the upside. If we don't get past that, we will look at this as a sell-on rise market.
There's a flash at the bottom of the screen as well. Lots of viewers have written in, by the way, asking about HDFC Securities and the fact that they're not able to conduct trades, etc., in a proper, seamless way. So these are comments from HDFC Securities. Important on a day like today. I mean, I think unfortunate, but they're saying we are facing intermittent issues with respect to NSE derivative segment, working with our vendor TCS to resolve the issue. So that is coming through from HDFC Securities. As I said, many of you have written in with asking us to try and contact HDFC Securities and ask them what's going on. So that's essentially what's coming through, and we hope the issue is resolved speedily, because on a day like today, you don't want, to be frozen out in that sense. You want to be able to do what you want to do in terms of trades. Rohit, so that's a very holistic kind of picture as always. So maybe a bit of a bounce in the near term, but you're saying over the next 1 month, maybe even lower levels from where we are now, right? I'm paraphrasing you, but that's right. Got it. So two things. One, if you can tell us, is the global cycle looking pretty good, pretty okay still, or you think that's also going to go into a bit of a funk? And second is, you said you can take individual trades here and there because broader market is not falling like it was in September. So if you have any specific pockets that you're looking at or stocks, go on.
So what has happened on the global space and where you'll find comfort is easiest place to find comfort is going to be in the commodities part of the market. Not just for the geopolitical risk, which makes it positive for oil, but we've seen most of the metal prices rebound since the sell-off in the dollar happened on the back of interest rate cuts, right? So that theme doesn't really go away. So we have two things here. One is the presidential cycle, which means a weak October followed by a post-election US rally. So we would still not, until we don't really get a major breakdown of certain weekly levels, which is pretty far away, I think, for the S&P. We'll not be too negative on it. In fact, we'll just expect a routine cyclical correction for October based on the past data. Having said that, the easy trade here, therefore, is if rates are going down, interest rate sensitives and specifically commodities and metals do well. So if you look at it, metals rallied pretty hard last week. They're not really falling much today. Some of the steel stocks are even up. There could be potential upside in particular oil stocks based on how oil does. So if oil prices actually move up, you look at upstream companies and see whether they can really benefit. You can actually see ONGC mildly positive today. But Reliance is doing something different. So I'm asked that question, okay, why not both? So I don't know the answer. The charts don't look so good on one and look a little better on the other. So these are individual places. I think within mid caps, it's very, very varied. It's not sector specific. So you have to pick individual stocks that are probably holding on to maybe their weekly averages. If you watch a 50-week average and you say, fine, this is a stock which is closer to the bottom end of its range, I would be more comfortable buying there. If I find some which is at the top end of the range, which means up above the 2 standard deviation mark, then I would not really be comfortable buying there. And you have to really make those picks individually as far as stocks are concerned. So that helps in cleaning your portfolio as well. Yeah.
So Rohit, I know that you don't like to talk individual stocks, but maybe some clues, not mid caps, but maybe large caps. I mean, till there's clarity, and we were saying that on the Nifty, we are at support levels. So unless there is a very decisive breach of those supports, if this continues to amble along, what are the immediate trades that perhaps someone can look at? Maybe just 1 or 2 examples here and there, large cap trades perhaps for the next couple of weeks.
So yeah, I'll mention the simple single sector, and I mentioned it is metals. And pretty much across the board. So it's not like I like the aluminium stocks more than the steel stocks. I pretty much think the whole segment does well. And
apart from that, so metals, absolutely. I mean, and even on a day like today, these are the only stocks in green. Apart from metals, anything else?
So there is a hope around banking. Nigel was asking me for key supports. I did give one. If that holds, then I would have some hope around banking coming back, because that was a space that has been undervalued. I think a lot of funds have been nibbling into it because valuations were like at -2 standard deviations on the 10-year chart. If I even look at a big stock like HDFC Bank, and it's already rallied from there, but it's still, that doesn't make it overvalued anywhere close. They're all like fag end of the bottom end. Same with a lot of the NBFCs, which are there. Like I had earlier talked about, say, Shriram Finance also, which is in the index, which also had very low valuations. But the whole point is, will they continue to hold out, and not break down in this correction? If they do, and you get a decent level of entry, then I would probably look at financials as well. But yeah, but it's all tricky, because they are not a direct trade. We are betting on that the interest rate cycle triggers a credit cycle and, many other things. But that in the face of valuations, and then if you get a bigger correction in markets, can those stocks really hold up, or do they also continue to go into a deeper correction? So that is where we get caught in that argument. But these are the places that we'll be really looking for.
All right, Rohit, we'll leave it there. Thank you very much for that perspective. Very useful and very pointed and specific with regards to positioning levels and the broader global picture as well. Thank you very much for that view.